Greetings. Welcome to the VIEMED HEALTHCARE Second Quarter 2026 Earnings Conference Call. At this time, all participants are in a listen-only mode. A question and answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star zero on your telephone keypad. Please note this conference is being recorded. I will now turn the conference over to Trey Fitzgerald, CFO. Thank you, Trey. You may begin.
Thank you, and good morning, everyone. Please note that our remarks in this conference call may include forward-looking statements under the U.S. federal securities laws or forward-looking information under applicable Canadian securities legislation, which we collectively refer to as forward-looking statements. Such statements reflect the company's current views and intentions with respect to future results or events and are subject to certain risks and uncertainties, which could cause actual results or events to vary from those indicated in forward-looking statements. Examples of such risks and uncertainties are discussed in our disclosure documents filed with the SEC or the security regulatory authorities in certain provinces of Canada. Because of these risks and uncertainties, investors should not produce undue reliance on forward-looking statements. The forward-looking statements made in this conference call are made as of today, and the company undertakes no obligations to update or revise any forward-looking statements except as required by law. The second quarter financial supplement and financial news release, as well as the related financial statements, are available on the SEC's website. With that, I'll now turn the call over to our Chief Executive Officer, Casey Hoyt.
Okay, thank you, Trey. Good morning, everyone, and thank you for joining us. I want to begin by recognizing the people responsible for our impressive Q2 results. As of June 30th, we've got 1,453 employees that made up the VIEMED team. Each day, our folks care for our patients, support our referral partners, and improve how we operate. I appreciate their work, compassion, and dedication they bring to serving our patients and our mission here at VIEMED. The second quarter combined renewed growth in ventilation with continued expansion across the broader business. We ended June with the highest active ventilator patient count in our history, set new records in other service lines, and generated record quarterly revenue. Ventilation remains the clinical and economic foundation for VIEMED. For investors who are newer to the company, our vent patients live with complex chronic respiratory conditions and benefit from receiving high acuity care in the home. We combine respiratory therapy, ongoing clinical engagement, and connected technology to help physicians manage those patients outside the hospital while improving their quality of life. We added 546 ventilator patients during the quarter and ended June with 12,635 active patients. The active patient count increased in each month of the quarter before accelerating in June, producing sequential growth of approximately 4.5%. Q2 produced the second highest quarterly ventilator setup volume in our history, and usage compliance improved by more than 25% compared with last June. Higher setup activity brought more patients into the base, and our compliance initiatives helped more patients remain on therapy. The results reinforce what we have communicated through the implementation of the new CMS National Coverage Determination for home mechanical ventilation. The underlying clinical need and referral demand remain substantial. Our teams have adapted to the new qualification, documentation, and utilization standards, and the second quarter results show that we can grow into the new coverage framework. Several quarters under the new framework have brought greater clarity across the care continuum. Physicians and referral sources better understand the documentation required to qualify a patient, and patients and caregivers receive clear education about the utilization expectations associated with therapy. We continue to refine our qualification, documentation support, patient education, and compliance processes as the framework matures. The addressable clinical need for at-home ventilation remains much larger than the population receiving treatment today. Growth during the quarter extended well beyond ventilation. Q2 was a record quarter for PAP setups. Sleep therapy patients increased approximately 5% from the first quarter and 44% from the prior year. Resupply patients served increased approximately 10% sequentially and 47% year-over-year. Each new PAP patient also expands the population that can develop into a recurring resupply relationship over time. Maternal health also reached a new quarterly high for breast pump deliveries, with activity through legacy VIEMED markets increasing approximately 9% sequentially. The early expansion illustrates the strategy behind the Lehan acquisition. Connect the proven capability to the payer relationships, referral channels, and operating infrastructure already in place across the VIEMED platform to accelerate growth. Our service lines reach different patient populations, but they rely on many of the same core capabilities, including payer relationships, intake, reimbursement expertise, clinical support, and fulfillment. During the quarter, we continued expanding the technology and fulfillment capacity supporting maternal health with the goal of extending those services into additional markets around the country. We also spent a lot of time during the quarter enhancing our sales organization. This effort led to defining and refining of more leadership roles, divisional expansion, market coverage, and further clinical support. We took the time to reset on the VIEMED culture and paint a clear picture of how folks advance through our organization. While these sales reorgs come with a heavy operational lift, they are always constantly evolving and necessary for setting the stage to achieve the next level of growth. Developments across the broader industry continue to reinforce the value of secured and stable technology and scalable technology, disciplined payer relationships, a focused portfolio, prudent capital allocation, and a balance sheet that preserves strategic flexibility. These have been long-standing priorities for VIEMED, and they remain central to how we are building the company. At the midpoint of the year, VIEMED is larger and more diversified than ever. Ventilation is growing under the new coverage framework, sleep and resupply continue to expand, and maternal health is beginning to benefit from our broader platform. We are investing in the capabilities needed to support that demand with clear expectations for productivity and returns. We enter the second half with multiple sources of growth, a larger patient base, and the financial capacity to continue investing in the business. Todd will now review our financial performance, capital allocation, and outlook for the balance of this year. Thank you.
All right, thanks, Casey, and good morning, everyone. All figures today are in U.S. dollars, and our full results have been filed with the SEC. And I'll refer to information included in the quarterly financial supplement, which is also available on our investor relations website. The second quarter was another record quarter for VIEMED. Revenue reached $78.1 million, increasing approximately 24% from the prior year and approximately 4% from the first quarter. Ventilator rental revenue was $36.4 million, an increase of approximately 8% from the prior year quarter. Other rental revenue increased approximately 19% to $16.4 million. Impressively, equipment sales nearly doubled to $19 million, with growth across sleep resupply and the maternal health business lines, and service revenue increased approximately 7% to $6.3 million. Ventilator rental revenue represented approximately 47% of total revenue, compared with approximately 54% in the prior year quarter. Total rental revenue represented approximately 68% of second quarter revenue, compared with approximately 76% a year ago. The change reflects faster growth in resupply and maternal health, not a contraction of the rental base, which increased approximately 11% year over year. The growing contribution from product and service revenue creates a different margin and capital profile for the company. These offerings generally carry lower adjusted EBITDA margins than our rental business, but they also require substantially less capital. We evaluate that mix based on its combined contribution to the revenue growth, cash generation, and capital efficiency. Gross profit was $45 million, or approximately 57.7% of revenue, compared with 58.3% in the prior year quarter. Gross margin improved from 56.8% in the first quarter. The year-over-year comparison primarily reflected the revenue mix and temporary distribution and inventory costs in our maternal health business as we manage record volume and transition supply arrangements. Our team maintained service levels throughout that growth, and we expect the new arrangements to provide a more efficient foundation as the business scales. SG&A increased as we added the capabilities required to support a substantially larger company. The primary drivers included compensation associated with higher patient setup activity, phantom stock revaluations resulting from the appreciation in our share price, technology and implementation work, additional operating capacity, and temporary duplication as we bring portions of our sleep and resupply operations in-house. These were deliberate decisions to support continued organic growth, which remains our first priority for capital deployment. We are in a growth phase, and we are investing accordingly. We are expanding our product and service offerings and adding the technology, talent, operating capacity, and sales capabilities needed to reach more patients and enter new markets. We are already seeing how these capabilities can increase productivity and support additional volume. With the implementation of our new intake workflow partner, Tenor, we reduced the time from receipt of a PAP order to qualification review from days to less than an hour, and shortened the time incomplete orders remain in the pipeline by several days. During the quarter, we increased PAP setups by approximately 16% sequentially, without a corresponding increase in fulfillment infrastructure. These are early examples of how better systems can expand capacity and improve efficiency as volume grows. We have just completed the integration of this system into our complex respiratory business, which will have a positive impact on our ability to effectively onboard patients and also gives a meaningful ability to scale the business in the future. Net income attributable to VieMed was $2.8 million, or 7 cents per diluted share. Adjusted EBITDA was $13.7 million, representing a margin of approximately 17.6%, compared with 22.7% in the prior year quarter. The year-over-year adjusted EBITDA comparison included an approximately $1.2 million swing in equipment disposal activity, driven primarily by the non-recurring gains from the ventilator return program in the prior year's quarters. Excluding that prior year gain, adjusted EBITDA increased year over year. For the quarter, operating cash flow was $15.9 million, free cash flow was $8.6 million, and net CapEx were $7.3 million, or approximately 9.3% of revenue. For the first 6 months of 2026, operating cash flow increased to $24 million from $15.1 million last year, and free cash flow increased to $11.2 million from $4.9 million. On a trailing 12-month basis, free cash flow was $34.4 million, or approximately 11.4% of revenue. Our capital allocation priorities